Hey guys, welcome to another episode of Tax Talk with Joel, and in today's episode, I'll be covering how to never get audited by the IRS. After speaking to hundreds of business owners, I can tell you that being audited is probably their biggest fear. Running a business is already stressful as it is, so the last thing they want to deal with is the IRS. And I get it, audit is something scary. Clients of mine get audited, they're usually really stressed and anxious. So how can you reduce your chances of being audited by the IRS in the first place? Well, that's exactly what I'm going to cover in this video. First of all, why is it that business owners get audited by the IRS? Well, to answer this question, we first need to understand how the IRS selects people for examination. There are usually different ways that your tax return can be selected for an audit. The first is due to a mismatch. What does this mean? Well, the IRS has a database of all 1099s issued to your name. So when you file your tax return, the IRS will have their computers check your income against their records. To prevent an audit, you want the income on your tax return to match the 1099s on file. If there are any discrepancies, you'll more than likely get some sort of correspondence in the mail from the IRS. When you receive this notice, it doesn't necessarily mean that you've been selected for an audit. It usually just means that the IRS is making you aware of the discrepancies. They usually give you an opportunity to make any corrections and respond to the letter. However, if you don't take any action, the IRS will make the adjustment for you and eventually send you a tax bill, which will include interest and penalties. You'll then be asked to pay the bill. If you fail to do so, then the IRS will take forceful action by either levying your bank account, garnishing your wages, and possibly putting a lien on your house. So if you ever get any correspondence from the IRS, make sure to take care of it right away. The second way your tax return can be selected for an audit is through random selection. Now, the chances of an audit have varied over the years, depending on how much funding the IRS receives. Prior years, your chances of being audited were actually pretty low, usually below 1%. However, just recently, as of 2022, President Biden signed into law the Inflation Reduction Act. One of the provisions of this act is that the IRS receive $80 billion in funding. Now, keep in mind that the IRS will not receive $80 billion all at once, but instead will be receiving a portion every year until 2031. A portion of this money will be used to improve customer service and technology. However, a large portion will be used to boost enforcement. What does this mean? Well, it means that there will be more IRS audits coming in future years. The third way your tax return can be selected for an audit is if your expenses are not in line with other businesses in your industry, or your current year expenses have changed drastically from the prior year. The IRS usually will compare your tax return to see if your expenses are within the norm. This is why accountants have made up the term red flag. If expenses are higher than other businesses in your industry, it will usually result in a red flag, which can lead to an audit. If your expenses change drastically from one year to the other, that can also result in a red flag and trigger an audit. How is the IRS able to check this? Through an NAICS code, also known as the North American Industry Classification System Code, which you are required to enter on your tax return. When it's time to file, a lot of taxpayers tend to ask accountants, are there any red flags on my tax return? And although I understand their concern, this is usually a sign that they don't believe that they can support their expenses. These taxpayers are usually estimating their expenses, and because these taxpayers don't want to get audited, they usually end up underestimating their expenses, which leads to them overpaying in taxes. So instead, what I recommend is that you have a good accounting system in place. You see, having a red flag on your tax return is not necessarily a bad thing, because what I think is more important is that you can support your numbers on your tax return. Even if your expenses are not in line with other businesses in your industry, what is more important is that you can back them up. Why would you reduce your expenses and pay more taxes just to avoid being audited? It doesn't make any sense. Instead, have the documentation in place and write off as much as you want, which leads to my next point. If you were to be selected for an audit, what is the documentation the IRS will ask for? If your tax return was to be selected for an audit, first of all, it doesn't necessarily mean you've done anything wrong. All it means is that the IRS needs to verify that the income and expenses reported on your tax return are correct. If you accidentally omitted any income, the IRS will usually just send you a bill for any additional taxes owed, plus interest and penalties for the underpayment. Or if some of your expenses are disallowed, the IRS will also send you a bill for any additional taxes owed, plus interest and penalties. It's very rare when the IRS will actually lock someone up and take them to prison. I personally have never met anyone who has been sent to prison for not paying their taxes. However, that being said, don't be the first person that I know who gets sent to prison. Instead, do everything the right way and you have nothing to worry about. During an audit, the IRS will usually ask for the following items. If you're an LLC, S Corp, or a C Corp, the IRS will ask for your financial statements. Business entities are required to keep a set of books and records in all circumstances unless your LLC is taxed as a sole proprietorship. In this case, your business is considered a disregarded entity, which means you're still treated as if you're a sole proprietorship, meaning financials are not required. Now, if you don't currently have financials, I would recommend purchasing a subscription to an accounting software like QuickBooks Online. For the most part, it's very user-friendly and easy to use. The second thing you will need is the proof of payment. An example of proof of payment would be your bank statements, credit card statements, and/or a copy of a check. The third thing you'll need is the receipt. Unfortunately, the bank or credit card statement alone is not sufficient evidence. The fourth thing the IRS will be asking for is the business purpose. In other words, what is your story of why you had to make certain purchases for your business? For an expense to be deductible, it needs to be ordinary and necessary. If there are any expenses that don't appear to be ordinary and necessary, the IRS will ask if you have a valid reason as to why the expense should be allowed. You will then need to convince the IRS agent that the expense was ordinary and necessary for you to make that income. If the expense was personal and not related to your business, then the IRS will disallow that expense, which leads to my next point. Should you be representing yourself in an audit? In my opinion, absolutely not. If you want to pass an audit with flying colors, there's no better person to represent you than a CPA like myself. As a matter of fact, there are only 3 professionals that can represent you in an audit. The first is an attorney, the second is an enrolled agent, and the third is a CPA. Of the 3, a CPA is the best professional that you can hire. Why? Because CPAs have a vast knowledge of not only tax law, but accounting as well. Just to sit for the CPA exam, you need to have a bachelor's degree, have taken a certain number of accounting courses, and have at least 150 semester units of higher education. CPAs then have to pass a vigorous 16-hour exam. Unfortunately, only 45 to 55% of people pass the exam. It's been said that the CPA exam is harder than the bar exam for attorneys. So my advice is work with a CPA as soon as you can afford one. That's it for this video, guys. Hopefully by now you've learned how you can reduce your chances of getting audited and what to expect if your tax return was to be selected for examination. And for my listeners who stayed until the end of this video, my CPA firm is offering a free tax assessment. You can schedule yourself in for a free 15-minute discovery call by going to sandovaltax.com/YouTube. Find the link in the description down below. If you learned something new today, please like, comment, and subscribe. And if you want to be notified the next time I upload a new video, make sure to hit the bell as well. Until next time, guys, have a great day.